us to be relevant to national standards and have taken steps since that time to do just that. When the OECD initiative on having tax competition morphed into the global forum for transparency and exchange of information, the Cayman Islands was selected to be a member of the steering group and of the peer review group. We, in that context, had two assessments or peer review assessments as they are called, and where we were rated as larger compliance with the international standards. And in that regard, we were placed in the same group as the US, UK, and Germany, amongst other countries. We have signed over 36 tax information exchange agreements. We have an agreement with the European Union on the taxation of income and savings, and that has been in place since 2004, which involved automatic exchange of information. We have had the Convention on Mutual Administrative Assistance in Tax Matters extended to us by the UK. We are signatories to the multilateral competent authority agreement on automatic exchange of financial account information, and we are currently a participant in the common reporting standards arrangement. In addition to that, we have two-factor like agreements with the US and with the UK since 2013, and those provisions have been incorporated in local law. The third stereotype is that we have low levels of supervision and oversight of the financial industry. Well, again, the reality is that IFCs have been subject to the same international standards and core principles of the Basel Committee on Banking Supervision, IOSCO, IAIS, and FATF as all other financial centers. We are members of IOSCO, IAIS, and CFATF, and we are also signatories of the IOSCO and IAIS multilateral MOU. Most recently, the Financial Stability Regional Group for the Americas has invited the Cayman Islands to be a participant and a member of that group. We have been attending those meetings and participating in discussions on a whole range of financial stability issues, including corresponding banking. And as a matter of fact, I am in part here to attend the meeting as well, and I am concerned with this issue. So, regionally, we are members of the Caribbean Group of Banking Supervision. We are members of the American Association of Banking Supervisors and of the Offshore Group of Insurance Supervisors, as well as the Group of International Financial Centers Supervisors, formerly the Offshore Group of Banking Supervisors. We have been reviewed by every single major international assessment relevant to this area. We have been reviewed by the IMF twice, by the UK in different ways twice. We have been reviewed by the Financial Stability Forum, the Forum of the NSC, and by the NSC itself more recently. We have been reviewed, as I mentioned, by the OECD and the Caribbean Financial and exchange of information with journalists to improve the physical presence of banks and the immobilization of their shares. As a matter of fact, just last month, a couple of months ago, the Legislative Assembly abolished their shares in Cayman Islands. There's a long story to that. Thanks to a short video. 1 year in which we say we know in terms of the broader IFCs, we are arguing upfront and upfront in terms of financial regulation with respect to trust and company services providers. The group of financial centers supervisors that I mentioned before, have developed a standard on trust and company service providers. And this is something that is a gap, has been a gap in the financial regulatory system. And we're doing a series of peer reviews, and we're hoping that this will in time become an international standard in 2027. So, I move on to the question of the lack of international cooperation. The reality is that most IFCs have various avenues for exchange of information with respect to criminal, regulatory, and tax matters. In relation to the Cayman Islands, we have had an interpractice agreement and a mutual legal assistance treaty with the U.S. since the mid-80s. And with other countries, we provide information on criminal matters through several avenues, including criminal justice, international cooperation law, and through judicial cooperation through the courts. The regulatory avenue is found in the monetary authority law, for which my organization has responsibility for. And that provides for us to provide information to other entities. We have over 60 bilateral and multilateral MOUs. We have received high ratings from various assessments mentioned, and from the FSB in particular, more recently on international cooperation. Finally, in relation to international cooperation, the Confidential Information Disclosure Law 2016 now repeals all confidential relationship preservation law, which has been the subject of much discussion over the years concerning secrecy. Much of the criticism was unfounded and uninformed, in the sense that the legislation from the beginning had significant gateways for providing cooperation with law enforcement, regulatory bodies, and legitimate requests from other governments. So, I think at this stage I probably stop here and open the panelists to comment. I'm happy to talk more about the which takes place, the concern about that has taken place primarily in the tax year. Happy to talk about that and on many issues. Give the time constraints.
Well, that's been awesome. So we'd like to have some information, more discussion once we explain it. So, Manuel Diaz is here from the island, and this is an expert on financial matters, including financial crime, financial programs, years, and this is the financial industry, financial crime years. Very clear about the work that good morning, everybody. Yes, I'd like to share with you something of my personal experience in political part, the landscape, we were talking about the Panama Papers, there is the G20 call for conference. There are genuine reasons for many governments to refuse opaqueness in companies and trust because it leads to taxation, because it leads to over criminal assist over criminal behaviors.
bilateral notification, and that's very interesting, very useful and important. It's based on also with the political will to implement and make the system functional. In terms of way forward, also technologies of interest, especially for smaller organizations, is the ability to pool resources. There is in the end memory modeling more in the Caribbean an interesting development with the CCAA union to pool AMS evaluations together. There may be also innovative solutions in terms of beneficial ownership, in terms of activities, in order to make economies of scale while continuing the net activities. So to conclude, the environment is challenging, that's for sure. The standards are in this context of global or relationship. There are obvious reputational issues. But solutions exist. Coordinated analysis is sometimes necessary, but as a wizard of it, and focusing on comparative advantages and building on capacity, there is certainly a high potential for international business. Thank you.
Thank you very much. That's really useful. I know it's still unfortunately it's going to leave fairly soon. Before we go to the chance to do our early questions, but they all have certainly much response on the points that have well made. We're very interested to hear your views on the practicalities of applying these new recommendations in business. So I know it's just about actually demonstrating application for rather than just having rules on books, as it were. And also very interested in hearing your views on whether there's space for all of the current international financial services in the Caribbean in the future, or whether there will be whether to do this.
Let me ask one first. I think there will be movement, that has already been demonstrated. I do believe that my comment earlier about the distinctions between those that are within the national standard and those that are not still holds, and that those that are not that was not in relation to the first question, I think we're well aware that on effectiveness, we've tested in the context of the FTA review, and also where I am reviewing some points which we have to undergo by the court itself, and that will be more focused on. So we're doing ourselves in a position that we can demonstrate the effectiveness of the legislation that we have. So it's not just a question of how the legislation is. We have to know that the regulator has some and so we believe that the establish operating deliveries for the others of the interpretation and stay up to responsible
to go we also have a common responsibility. So my proposal is this. At first, there is, when we have financial institutions and others, we're working with them to, as they have, continue to own and have responsibility for their decision for their project. And that's something I think, thanks to the diligence of compliance officers on their own, and general counsels, and companies that are truly trying to make sure, not just that they're not regulatory crosshairs and criminal prosecution, but trying to make sure that their companies aren't legally used. That's critical. And the flip side is also true, that the regulators and law enforcement and the agencies on top of them set forth their expectations, and then when those expectations aren't clear, they make them so. And when those expectations are clear, and even when they're made so, they make sure that the line, for instance, the bank says go away and follow the financial institutions and others are in fact following those policy guidelines, so that when the Secretary of the Treasury says there is no know your customer's customer obligation, or someone else in the Treasury can say that's actually on their own. So that financial institutions are not subject to unreasonable requirements. And the only way, and in my opinion, the only way to get through these challenging issues, and it would not be it's not going to be a silver bullet, it's not going to be a panacea of all problems, but the only way to resolve these problems and get through pressing humanitarian, financial inclusion, overall commerce, world concerns, is for us to recognize as institutions, as governments, and as others acting in this space, that passing of responsibility might just be something that everybody is talking about themselves.
Thank you very much. Also, really interesting thoughts there, and interesting to go to travel experience. Perhaps a question for both of you, and something that Langston alluded to, didn't really talk about too much detail, is about the question of the level playing field. And I know that a lot of the international financial systems in the Caribbean feel that they are being unfairly hit on and pushed into complying with things that the other major developed world countries are not doing themselves. There's a level of democracy there. Can you both comment on a bit about that, and how one tackles that, whether the countries who are pushing through the reforms should be getting their own house in order first, and also how you tackle the issue of the risk that as you bring well-regulated Western jurisdictions like the Cayman Islands into a higher level of compliance with what the international regulators want, you have a risk that more and more transactions will go to less well-regulated, more of a less salubrious jurisdictions. Hopefully, a promise by this.
I think that's actually a very important attention to accept the daily life, because we have already identified that we are aiming at having a relationship with all of them. And I'll give you two examples. So as I mentioned, the element is assessing conflict and things like that. And if we stay on the initial ownership, we recently assessed Canada, which is an important conflict for the Caribbean and the banking sector. And the rating of Canada on the implementation of beneficial ownership has been the lowest in all the social ownership. So that talks about level and the importance to push on this, and to make sure that these standards are implemented everywhere similarly and consistently. The second example is that the element that not only do assessments, it also do what we call article 4 consultation, which management team goes in each and every level to discuss economic policies.
pointing out those jurisdictions to say that this is a jurisdiction that has its concerns with making financial institutions some pause. There's a risk because then that financial institution might say, if you're associated with this jurisdiction, we're going to de-risk it, we're going to include anything. And so there's a ambiguous that works.
Thank you very much. I'm conscious that we've got more minutes left before we go to the next panel. I'd like to invite any of you to answer questions or maybe provide any points to please join me this microphone.
My name is Bruce Harris. I have some comments and questions. I think the real issue on international business companies in the region are the states. The states are both regulators. So, for instance, a few weeks ago, it was the sovereign state of New York that imposed a $80 million penalty on Baybank for their business in Panama. It's also the states that have anti-taxation legislation that make companies do worldwide reporting when they do business in the so-called blacklisted countries. So, for instance, the District of Columbia, has one of these laws. But it's also the states that are getting all the business now because the U.S. has not signed up to the Common Reporting Standard, and also has not even fully reciprocated with FATCA. And even Article 4A of FATCA, IPAs, the U.S. says, we're sorry that we can't completely reciprocate that. And meanwhile, the Caribbean, each country has spent millions of dollars implementing FATCA. And so, the question is, if we're really going to have a level playing field, what are the international financial institutions going to do to stand up to the superpower so that more of the businesses don't keep going to South Dakota, Nevada, Wyoming, Delaware, and unless something is done quickly, like the World Trade Organization action against the U.S., or some other action, I don't think there's going to be a solution that's going to be equitable and is going to address some of the problems like financial inclusion that we've heard of. Because there's no de-risking for any banks in South Dakota, Wyoming, Nevada, Delaware, where you really have the equal capacity process.
Thank you. Fascinating. Thanks for your preparation. Do other questions?
I can start with that one. Maybe to come back on the last one that there is no risk in the US. Actually, we see some informal de-risking, including if you got the context of public that may be some banks in other states or not
banking space and some other areas where state and federal regulators, to federal regulators, there sometimes can be some appropriate talent in applying our rules. Sometimes there's a regulatory enforcement contracts, whether you don't think that was an appropriate funding when you go after the same behaviors. And that's a real concern. If I were running this institution, I would be concerned about that. In terms of the second, the thought of having different tax savings or financial regulation savings on a state-by-state basis. I think part of that concern is attempted to be addressed in the proposed legislation. We'll see what happens with that legislation. I don't think it's the first proposal for it, but it's absolutely a difference between, and the attempting to have that sort of infrastructure as opposed to a bank. The MSB needs something that the bank doesn't, which is, the bank already has a correspondent relationship. They work with or something. The MSB is going to be a bank saying, and this is true also in the banking space. That's why MSBs and the university payment models are also going to be, like they're not, of the official announcements. They will always have, in addition to the regular regulator, whether it's FinCEN or IRS or a state regulator, they're always going to have a bank saying, yeah, we disagree with your, or we're going to pass judgment on your compliance model. But it's very good.
Any other slides? Any other last questions? Well, I'll draw this session to a conclusion. I think we covered all the issues that we wanted to cover, and it really points to this issue and the way of complexity of the situation, but also, I think jurisdictions like Kenya, the current primary have done a fantastic job of actually taking the time back and saying, people are part of the government looking for they're really going to initiate defense of the positions and that's the interests as well as the tax order. So, it's interesting. So, I'd like to ask you to give a short round of applause to our panelists today, and thanks very much.
Thank you, Chris, and thanks, panelists. We're going to move right into the closing section. Just a couple of remarks on the situation we're going to get from the IED. From my perspective, this is really an amazingly rich set of experiences and good knowledge. I think we've heard just about every side and angle of this issue. We have some solutions on the table. We have some real practical things that can be done by the regulators. We have some key insights from the bankers. We have a lot of information from the U.S. regulatory side as well. The fact that the government is now missing from this room is because they're at this very moment in a meeting with Jack Lew, Secretary of the Treasury. So hopefully they will convey some of the sentiments that have been expressed and concerns of the countries in this region directly to him as we move forward. I want to introduce now to wrap everything together, Jeremy Wilson, who is the past chairman of the BAFT, vice chairman of corporate banking of Barclays. His full bio is on the website, so I'm going to read that out. Jeremy is going to try to synthesize where we're at, as well as
has to be a good thing that that discussion is taking place probably not more than 100 yards away from this home. And it would be very nice to know that a lot of what has been said over the last 2 days is actually being fed directly through to probably one of the most important players in finding an answer and a solution to some of the things that have been discussed there. Anyway, so just a little bit of background. So I'm really primarily here on an industry basis, not representing Barclays. Barclays did have a very big footprint in the Caribbean, as probably many people know. But those times are long past now. But the reason, when Sally said to me, would I do this, and also asked me if I would chair a private session, which has been referred to a number of times over the course of the last couple of days, which took place on Tuesday. When she asked me if I would do it, my primary reason for saying that I would be happy to do so was because this has been looming as a global issue, not just a regional issue. And I think everybody probably knows that. But to me, it was very helpful to suddenly find that there was one region where this was felt, some of the issues were so acutely felt that it was looked likely to dominate a discussion at a two-day conference like this. Because when you get something like that happening, and it's got that degree of focus, it does tend to mean that the rest of the world has some discussions upon which they can have future movement on. And without wanting to go too high a level, this does feel like an issue, which is global, not, we know it's global, but it needs addressing by really the highest levels of global coordination possible. So what are my credentials for doing this really? I was chairman of BAF, which is the, Tom Burwell was talking about that a couple of days ago, and it's the Global Trade and Payments Association, which about 4 years ago warned at its own conference that de-risking, which has really dominated a lot of the discussion over the last 2 days, that de-risking was going to become a very significant issue and needed to be addressed. And I was chairman of that at that particular time. I was also chair of something called the Transaction Banking Global Users Group. Now that was the big transaction banks around the world who meet 4 or 5 times a year. It was the heads of the transaction banks. And it was they who said to SWIFT, I think you really need to start thinking about some functionality to help this issue through. And that's why SWIFT introduced the screening system, which is now proving to be so useful and so valuable in screening payments for many of the banks, some of whom are represented in this room, but many, many banks around the world. Now, I should also say that I am not an expert in this region. And although I did have a delightful 3 months internment in Montserrat when I was 20-year-old or thereabouts, which has given me some very strong allegiances to a region which I scarcely had an opportunity to visit back. So I would just ask your forbearance if I sound a bit clumsy in some of the things I say. Because what I'm trying to do is to bring together the discussion. And I did find myself thinking, closing discussion, what does that mean? And we've got 45 minutes to do it. Well, you don't want me talking for 45 minutes. So what I would like to do is to open this up in a minute or two. But rather than just say, has anybody got any thoughts about what they heard over the last 2 days, I thought it might help if I gave you an interpretation of what I've heard. You clearly don't want a regurgitation of everything that has been said. There's no point in that at all. But some degree of interpretation may be helpful. So I was going to do this. I was going to give you that interpretation, give you some suggestions that I think have surfaced during the course of the last 2 days. Many have, so I'm sure I won't cover all of them. And you may feel at the end of it that this needs to be taken into account as well. Then I that's the shape, if you like, of the next 45 minutes. So let's just start with my interpretation, and I'll break it down into 5 broad points, 4 broad points. It is quite clear that something is not working, and it's not working to the extent that it is making a significant difference to the mainstream plumbing of the global banking system. It's also clear that things are being done to try and address this. And it also seems to be clear that more can be done. And I also have this growing sense, which I wanted to test with you, that we're probably fighting today's battle with yesterday's weapons. So, something is not working. Let me just talk to that very briefly. I have been struck by the severity of de-risking. I have been appreciating on the way away on the other side of the world to some degree, just how serious this issue has become. You really have to sit here and listen to what has happened over the last few days to understand this. Every single session is referred to it. This feels like, to me, like it's increasingly excluded from the mainstream. And that means 2 things. That means it's denied access to the global climate. And more significantly, and this became very strongly over the last 48 hours, it is denied access to knowledge and intellectual development, intellectual thinking, which is leading to developments in major technology, which are moving rapidly ahead in other parts of the world. The UK, Europe, US, China, things are moving very quickly. And yet you get the sense that it's very hard, if you're caught on the other side, so to speak, to be able to pick up on this knowledge and move it forward for the benefit of the region. And yet many of the answers in this new technology, many of the solutions we found in new technology will solve some of the answers that we need in the region. So, to give a bit more detail to what I think I heard over the course of the last 2 days, what is wrong here? Certainly, financial exclusion at the expense of growth of economies came through very strongly from the senior leaders we had. Financial inclusion of the criminal is happening outside the mainstream. So let me just repeat that. We are including the criminal in the system outside the mainstream. Now that's a pretty serious situation to deal with. Small economies, I can't remember who it was who said this, are to some degree being trade embargoed as a result of this. I think it came up in the finance. I also heard that from one of the experts who in law enforcement is here, that no self-respecting criminal would actually seek to go near the fully regulated system anymore. It's just not so tightly policed that they'd be mad to go and invest. There are better ways and easier ways to escape the law than using the major regulated system of the world in fact. I also picked up that there are some very expensive models for ineffective policing. So we're spending a lot of money on stuff which doesn't really seem to be delivering the return it should. And of course the other point, which is that small banks are finding it very, very difficult to move, whether it be on the technological front or whether it be simply on the internal policing of their own systems and their own operations. Those, I think, are the sort of main headlines. banking was being used and abused by everybody. And that was largely because technology made it so. And as a result of banking, and instead of being the right of the privileged few, became an accessible device or instrument for almost anybody who chose to have one. I don't think we should forget that. And it is clear from the comments that Calvin Wilson from the Caribbean Factory say that the reader in the system has forced standards to rise and compliance has improved. So I don't think we should lose sight of the fact that significant progress has been made because of a concerted effort on behalf of society as a whole, which the US was being prepared to throttle the use of the mainstream by the criminal. And Mexico was a very interesting example of Mexico to show just how far you could go down this road to improve controls and improve the system. However, the simple truth is that if you are so minded, and if you have malign intent, if somebody cuts off your access to one area and there's enough money in it, you will simply find another area to go. And I was struck by the Montserrat example of being completely cut off and all those, all the diaspora unable to send money back home through the remittance system. Literally, as I understood it correctly, Montserrat was sealed. You couldn't get money in if you wanted to. Now, it wasn't talked about, we didn't address it. I cannot believe that money didn't get there. In some way or another, that money got to Uncle so-and-so, Daddy, Mommy, whoever it was, who desperately needed that money in order to be able to put food on the table. So you have to draw the conclusion that that money moved out of the mainstream into a completely unregulated system, with all the attendant dangers behind it. And it reminded me very much of the immigration crisis that Europe was engulfing Europe at the moment. So I'm sure you're probably all tangentially aware of it, but immigrants are flooding to Europe through the illegal machine of the legal system. So what's happened? The criminals have taken charge of that entire process, and lives are being lost and significant damage is being done. So we have this situation where the unintended consequence, which was referred to before, of the increased policing of the system has been that we may have driven significant flows outside it elsewhere. Now, I know I'm repeating things that have been heard over the last 2 days, so I hope you'll forgive me for doing this. But I was trying to put it in the context of seeing both what are the answers and where might we go from here. Because I'm slightly going beyond my brief, I think, in terms of the closing discussion. Maybe that's where we should all go. I'll stop and we'll talk about this a bit further. So what is the answer? Well, it seems to me that a number have surfaced over the past 2 days, things that are happening or could happen. I noticed, simply in doing research before I came, that the IMF, the World Bank, the Basel Committee, the US Department, the US State Department, Treasury and so on, the agencies represented at this conference, all recognize the issue, and they're all doing something. This is no longer a situation saying, from government or regulators, actually there is an issue here, you're just trying to make excuses. I don't think that is any more the case. I think there is serious focus being addressed by it. That seemed to be what was coming through. Secondly, countries are definitely enhancing their own regulatory regimes. There were some very impressive stories today of countries that are really picking up in that area. Thirdly, there is help coming from global regulatory bodies. And I think I'll go back to that Mexico story that Mark talked. So it isn't just you're on your own. We recognise there's a problem, you're on your own. I think it is we recognise there's a problem and we'll do what we can to see if we can take this forward. And that seems to be shared service centres, and regional regulators getting together. So there is the movement is happening to start to push this forward. But then I come to the other point, which I think became clearer in the last 48 hours. We may well be fighting today's battle and yesterday's weapons now. And there were a number of suggestions and ideas that came forward. But for the most part, not exclusively, but for the most part, I think we find those answers in technology. And there's something satisfying about that. The criminal has used technology to his own advantage. Cybercrime and fraud the money available is so significant that syndicates of criminals can really devote vast resources to meeting the system and make regular money happen. Well, it's time, I think, that we use technology globally to defeat that. And this is one area where it could be done. So, what is the value of technology? Where do you get the most benefits from? Well, we are lucky in that we are living in the middle of a technological revolution. New ideas and solutions are pouring out of the system, almost wherever you go. I mean, I was interested in your comment, the Bitcoin presentation yesterday, which is a Caribbean idea, which is about as advanced as any I've heard around the world. So this stuff is available everywhere. It is fostered and encouraged. What does it do? What should it do? If it's really going to make a difference, it isn't an increased cost. It reduces cost. That is the best use of technology. It makes it more efficient than anything else. But fundamentally, it makes things easier, smoother to work and to work more cheaply. Another area of fintech, I'm just going to touch on 4 or 5, just as one part is of course blockchain. Now, this is a form revolution, or evolution, I suppose. Some people will tell you it's the next thing after the establishment of the internet. So a little bit like the internet, it's actually quite hard to understand to begin with. I mean, most people when the internet was first mentioned didn't really understand what it was like. We now are so used to it, we've forgotten. But blockchain is in a similar place. And it looks as if it will transform it. And today, Paul Dwyer from Americas, is that Paul Dwyer? See how you remember, probably everybody knows the name. But when you were talking about the judge and the judges and how necessary it was to see and understand every single transaction, blockchain has that capacity to do that. And so everybody can look in and see the same transaction, date stamped, immutable, unchangeable, and make their own judgment. Now that means you're not passing the responsibility on to somebody else to make the judgment. You make your judgment at the same time as somebody else, at the same time as somebody else, and the thing can be done in seconds. Now, of course, the technological horsepower behind that is huge. But I remember talking a long time ago to a man called Lord Brown, who in the oil industry, and they just found oil, I think, offshore Argentina. It's very deep and difficult to find. And I said to Lord Brown, surely the challenge there is going to be the technology of doing that. And he said to me about this one. And he looked up at me, and I felt even smaller than him. He said, technology will always find the solution to the problem. You don't need to worry about the technology. We will find a way of getting that oil out. We just have to have the right price to be able to justify it. And that price is not very far away. And as it happens, that was 5 or 6 years ago, so things have changed a bit, and I have to ask him the question again. But when people So blockchain is an area that needs to be looked at, and I would suggest to everybody in this room that you have a responsibility now to understand this and see where it's going and help provide solutions moving forward. 3 or 4 other things were mentioned: artificial intelligence, of course, mobile banking, which of course is a double-edged sword and makes transfer of money very easy to certain people. But it equally has the capacity to have some policing built into it. And then of course SWIFT and big utilities. Now there are many other technology-based solutions that we can pick up, but it seemed to me to underscore this simple point, that we need to look forward to crack this problem, not look back. And this sense of adversarial judgment versus the judges to go forward, whatever else you want, is actually not very helpful. So, I've really come to the end. I think it distills down to 5 simple points, which I'd like to test with you. The current model has worked, but something is not working properly. There have been unintended consequences, of which de-risking is one. The third point is that now needs resolution. If not, it threatens to jeopardize all the good work that has been done up to now. You can drive too much traffic out of the mainstream, discovering or regulating a shell. The fourth is that important parts of the public and private sector now see this and understand it. And the fifth is that resolution lies substantially in 3 areas. Now, I would stress this is me trying to interpret what I've heard, and you may not agree with it, and you may not feel that it's going in the right direction. But simply in order to stimulate some discussion, I thought it would be better to put something in front of everybody and then we can talk about it. So the resolution, the 3 areas where I think resolution lies are: 1, continued enhancement of controls. What has been done has done a great deal of good, and we shouldn't simply throw it out because there are some unintended consequences again. Secondly, this now requires collaboration. Actually, where I wrote it down here is that it requires greater collaboration, because I think collaboration is the key. That's collaboration between regulators, governments, and the private sector. It's okay for the regulators to talk to each other about it, it's okay for the governments to talk to each other about it, and it's okay for the private sector to talk to each other about it. But the answer to this, which is a common issue for all of us, to drive the criminal out of the system, is collaboration between all 3, which is not necessarily a mentality that is currently seems to have broad currency. And the last is encouragement of fintech. So, 1, continue to enhance the controls. 2, let's get greater collaboration. And 3, encourage fintech and make use of the technological revolution we find ourselves in the middle of. So I don't quite know how to test whether I'm broadly on the right road with this. With you. So I think I'm going to do this. Just make it mildly awkward, and if you feel you can't come out of the way, then don't rush you to ask you a question. Are you broadly comfortable with the direction of travel of my comments and what I've said? Could you just raise your hands if you're okay with this direction which is going? Okay, so I've got most of the room. I'm going to take into account the fact that I can bring people here who have to report to their bosses, and they might not necessarily be that comfortable with sticking their hand out or putting their head above the parapet or something like this. But I think I would like to ask, if you did agree with this, or you've got something else you want to put on the table, why not do so now? We've got, when do we have to finish? In 10 minutes, am I correct? anybody have any particular points they want to raise or issues they'd like to put forward?
Great summary. I am responsible for the world data. My point is, coming from the technology side, I think it's a big picture, but it's easy with the way we, from the banking sector. I wonder, first of all, a question, who do you see challenging you in that whole sector? I see banks for two reasons: trust and interest rates. I believe because interest rates are gone, and in many places of the world there is a challenge. Let's put Argentina as an example of trust. We see, and we're in conferences, the internet companies. Forget about fintech. Fintech is just, I think it's happening, it's a general name. But there are major forces coming to this sector, to the financial sector. One group is the internet companies. As a matter of fact, they're very well represented in Washington as a few months trying to get the regulatory infrastructure revised. The next group are major retailers, or coming data. They sit very pretty from the financial systems as basically clients already. And then the group or the telecoms that haven't really quite figured out how to get in. And then there is the whole group of small fintech companies trying to attack not the whole sector, but just very specific services. So from your perspective, how do you see evolve? How do you see from Barclays, from the banking sector? Do you see this as a reality that will happen in the next few couple of years, 5 years? I wonder what is your opinion? And in terms of evolving technology, if we want to take it at a high level, we have the internet. I see 3 layers of internet. The internet, the dark internet, where it's highly protected, and so forth, it's a whole layer, and there's its own browser, and so forth, it's a whole field there. But I see a secure internet evolving, extremely interesting, where blockchain is just one of the little pieces. And that's the biggest threat to the financial system, to the banking sector.
Thank you very much. I think what we should do here is let's take 2 or 3 questions. I'll take a note of them. Other people might have things they want to put into the equation. But in addition to that, I'm slightly conscious of the fact that either we'll have to go on until Brian Winter gets released from this meeting, or as soon as Brian Winter comes, say, can I take, will you just nudge me when we need to stop? So there was a question of the microphone, and then there was a lady question. So let's do that 3 is around, and then 4, and then I think that's probably about as much as my simple mind can accommodate. But maybe others who want to respond to some of the points. So,
The discussion is quite interesting on 2 fronts. There is an issue of the Dodd-Frank regulation sort of enforcing monitoring process. The obvious is that we have the real-time data that can track the activities of criminals, whether it's anti-money laundering or terrorists. So the footprint is there. In your opinion, how much of this regulatory issue more the big players, the legacy players, protecting their market share and using regulatory issue to sort of allow them to catch up or control the process?
I think I'm going to just rephrase it slightly.
We're seeing disruption. We're seeing disruption of the financial service industry. In Davos, the major players got together and they talk about how they can work together strategically. Obviously, technology is way ahead of the legacy players. And so now technology is now threatening the market share
of the legislators. How much of the regulation is pure regulation, or is it more that the regulation allows the legislators to catch up with technology?
So far, I think these are, which is fine, these are views that are asking for my views, which I'm very happy to contribute to, of course, and be interested in anybody else's perspective as well. But let's get to the last two questions.
It's not really a question, but I'd like to add something to your list of conclusions. I think we first observed over the last year and a half of financial inclusion. We all acknowledge that the anti-money laundering and terrorist mechanism was in controls that are not quite working today. But I would like to add a fourth point of view or 3 points of conclusion about financial inclusion and how we work to help the small banks, help the local populations in the Caribbean to have a life, normal.
Yeah. Thank you. Thank you very much, Ian. And the last question, which was that.
Thank you, Chairman. Just 3 quick points for the record. David Lewis of Manchester, Treasurer and Trustee of CCAA. One self-serving, the market focus of the issue has been island Caribbean, specifically English-speaking Caribbean maritime. And it might be of use to wonder, well, what's going on with other similar-sized markets in this hemisphere, which clearly must have similar issues, but clearly their presidents and prime ministers aren't shouting murder at the UN whenever they go up. So Central Americans, Dominican Republic, even places like Peru and Colombia. I think for the record, in terms of the hemisphere, what is going on there, there may be a learning curve there in terms of what those markets have done vis-a-vis this issue. And with regards to that, it's great news for a workshop with Mexico. Mexico is an OECD member country. It's 110 million people. I worked in the call center industry for clients, and in the Caribbean, they all want to go to India. And I said, well, why don't we try maybe seeing what Colombia is doing before you jump to India? So Mexico is a good case, but maybe we can look at a few more smaller, closer, relevant markets that clearly have diaspora in the U.S. and have an interest on that factual issue. I don't think it was mentioned. I missed a few sessions yesterday, but I think Montserrat is an issue. We have one country in the Caribbean that's completely delisted everything, and that's Belize. And I haven't seen one scientific case study of what happened with Belize, explaining everything to reach that level. And I think if we're going to go into and look at the patients, we ought to look at, we got one victim already. Let's do that forensic autopsy well, so we know what happened to that victim, and then we can look at what's going on with other potential victims. And one final semantic group is the lawyer in the room. We keep talking about regulations. In the U.S., yes, there are regulations, but they're law. So when, I think sometimes people hear regulations and say, oh, we can change a regulation. We can go talk to Secretary Lew and he can change a regulation. My experience with the Department of Treasury is they say, guys, the issue is Congress. This is a law of the land. I can't do anything to help you until the law is changed. So when we talk regulations, let's make sure people don't think that, oh, that's something that, we can tweak it here and there. This is law of the land, which is now going on 15 years, right, Bruce? Patriot Act and, Dodd-Frank and so on. That's really the big challenge because, we could get a Caribbean president tomorrow. He cannot do anything until you change the law of the land. So when we talk regulations, let's make sure we mention the laws as well. That's the issue.
Thank you very much. That's very helpful indeed, and more of a comment, I think, than a question specifically. But it does show you the extent to which this has to go right to the top as an issue. Maybe in the last 2 minutes, I have a suggestion to make, which can then be picked up by the CCAA. So the question, so other areas like retail and other areas that are coming into the equation, in other words, if I understood if I put it back in a different way, it looks as if the banking system is being disenfranchised by technology because others are able to come in and do this stuff. That's absolutely true. That's absolutely true. So that is a big issue for society. At the moment, we have a I think it was a good system when money, which is very toxic, if it goes wrong, society is in deep trouble, nations can get completely destabilized if it gets used. So money, according to the general consensus of the planet, must be regulated and regulated tightly. And yet we have a technological phenomenon developing which looks as if the handling of money, even the medium of exchange, is changing. That the systems we set up to accommodate the old structure are going to be inappropriate going forward, and others are going forward. My personal view is that the custodians of society won't allow that to that extent. They want the innovation to come in, but they do not want to find that the entire system is running fast and loose, free of control, because there will be a catastrophe of major proportions. So what we are seeing in Barclays is growing partnership between the banks and the brand new service providers and the innovators. And we think that that combination ought to lead us to a conclusion where you have an energetic, modern financial services system which is delivering the type of service that everybody wants in a tomorrow's world, but is also properly overseen so that it can't be abused. The second question was, is regulation being used as some sort of a defense mechanism for the established players? This is a personal view. I honestly don't think so. I think if anything, the regulation is squeezing the current players to such an extent that they are finding it very difficult to put the money into the new investments that are required to take things forward. It sometimes seems like that, and this is purely a personal view, but I think actually that this very tight and somewhat clunky regulation is actually damaging to everybody, not least the incumbent players. And the third question was financial inclusion. Well, I think the whole world of identity is being turned upside down by technology at the moment. It is a very, very exciting world for the small man. But it is also a very frightening one, because it depends who gets hold of that identity. If you are a small individual and the fact that your identity is firmly and clearly established, that ought to give you some very significant rights. But under the new technologies, those rights haven't even begun to be thought of properly. And so society is going to face a big moral issue when it comes to sharing of data, which gives increasingly people their identity. It's a big subject. I happen to be very interested in it indeed, because I think that it's a steam train coming down the track at us, and we're not even prepared and ready for it to be abused by the wrong people. But the answer to financial inclusion lies in these new technologies that are coming through. And if you stand forward 10 years, I believe political systems allowing, the small man or woman will find themselves more included than they were 10 years before. The other regions point. I suppose that is one of the reasons why I feel today I may not be allowed to do this, because Barclays is concerned that I don't know the region I own remit and speak on their behalf as an institution. So please don't take anything that I have said today as being Barclays' perspective. It's mine and my views alone. But they do allow me, because they believe that this kind of thing is good for the industry, for me to come out and talk. Now, I believe that one region which feels so strongly is so close to the United States, where so much impact of the unintended consequence seems to be taking place. If that one region chooses to stand tall globally, you will find that regions all over the world will come to the party and join forces. So my suggestion and recommendation, and Brian will tell us about this, I'm just going to keep on and we have to take any other questions. My suggestion would be that we ask those trade bodies who have been represented in this room for the last 2 days to take the conclusions of this conference forward with all the enterprises that it lies within their expertise and their job to do. So it may be that the IIF, that BAF, that CCAA, that FIBA, all these bodies may decide we ought to get the message of this conference more widely distributed. And let's get it up to the IMF, let's get it to the World Bank, let's get it to the G20, let's get it to other areas, so that it can start to be addressed. Because at the end of the day, we have common cause. It's very simple. We want to make sure that the criminal and the terrorist and the money launderer is driven out of the system. And it doesn't matter whether you're a president of the United States or a bank clerk. We all want that same objective. So this is the type of thing and the type of discussion that we're taking going forward. So that was my broad view. And we've still got time. So if anybody else has any comments or observations they'd like to raise, go ahead.
The topic of regulation hindering technology. We actually did see a pretty clear example of that in New York with the bit license that was introduced and last year. It's extremely, we are not a bit license. It's extremely onerous on startup companies in this particular field and has very high barrier of entry to the system. But then looking at it further, the same guy last year introduced a license. Weeks later went on to consult a company around the irony in anger. But if you look further at it, it's not just the regulators that may be hindering technology. It is in fact the banks themselves in some instances, whether it's pulling the bank accounts of the particular companies involved in the space, or really outright rejecting them access to the financial system. As a matter of fact, I've experienced this in Barbados, where the 5 non-indigenous banks refused to give us access to the banking facilities. However, in the case of Belize, where it was discussed that this is a situation, we in essence were facing that same scenario of de-risking environment. But because of the use of the same technology that we're involved in, we were able to continue business operations, we were able to continue global trade, we were able to continue getting our payroll of 50 Barbadian staff, encouraging more so much capital investment to the island, and not going through any of the financial services sectors. So the thing is, there are patches to the system, and sometimes it's not necessarily the regulators that hold you back. It's actually the regulators that like feedback and transparency, accountability, usability. It could be, potentially is, in some cases, it very well is, the financial institutions or banks that approve competitive behavior in the technology. Keeping in mind, the 5 banks that exist in Barbados, 3 of them are Canadian, and all 3 have blockchain development capacities.
Well, that's very helpful. I don't know if anybody else has got any observations on that. My immediate reaction to that would be there is that capitalism of commerce and competition has built within it all the devices and employs to keep out people who might eat your lunch. So I think what we come up against, that's natural. Using regulation to protect you is not necessarily a good idea for the good of society, because that's not what regulation is set up for. But simply trying to keep you away from their customers, that's competition. And you will find the established enterprises will do that. But in my view, those enterprises that fail to recognize the validity of technology-based competition are frankly signing their own death, and they will ultimately disappear. So, big organizations like mine, like Barclays, the one that I now work most of my time for, Barclays has an accelerator where it encourages young entrepreneurs with new ideas to come in, and the first accelerator was divided into two. We don't care what your new ideas are, this is just a place you can come and try them out, and we'll give you ideas, we'll give you guarantee, we'll give you this, that, off you go. Whether it's how you feed fish more efficiently in a more sustainable way, or whether actually you've got an idea that you think is going to change the service to the customer of a bank. Anything will go. But one part of that accelerator is developed to that. We want you, bright entrepreneurs, to come in and tell us what you're doing. Now, that model is being used by banks, but certainly all over the United States, Europe, the UK, and by companies because of this phenomenon of new technology. So the regulator of the UK, the FCA, has set up a sandbox, and the sandbox is a place where these new ideas can come, where anybody participating in that sandbox is sheltered from recrimination if something goes wrong. I mean, I'm paraphrasing. But simply the idea is I the regulator don't want you as a bank stopping new ideas coming forward because you're afraid that I'm going to turn around and fine you. So I'll give you a place where you can come and experiment. And I'll make sure, by the regulator, that it is not going to turn over the entire system if it goes wrong. Now, what you've got there is the private sector doing its stuff to recognise competition, and the regulators doing their stuff. Now, I would think, given the pressures on this region, that the same model could well be adapted by the region, by the banks and the regulators in the region. Now, this is where I start worrying about my rights to say anything like that, because I don't know the region and I'm not a banker. But this movement, this innovation movement that is really sweeping the world is so prevalent, needs to be picked up in this region. Because one of the messages, one of the simple messages I should not forget, was given to me by a blockchain expert who did the first blockchain-based bill of lading in a trade transaction. Very exciting, it was about a few months back. And he said, Jeremy, what you do with these is you go to the bits that are working least well, because that's where you can introduce the greatest efficiencies and make the most money. So don't go in the areas that are working well, go to the areas that are working badly. And here we have a region where something is really working not well and needs to be fixed. And therefore it seems to be that all the forces of innovation should be brought to bear. Again, I stress that as a personal view, but I see people running around the table. Okay, how do we go? There's still... Oh, sorry. Okay. I'm going to stop there. Thank you very much for your questions.
Thank you so much, Jeremy. We are absolutely delighted. We apologize for a slight overrun on time here, but we are pretty much almost on time. And we're delighted to welcome Governor Brian Winthrop of the Bank of Jamaica. He was appointed Governor of the Bank of Jamaica in November 2009. He's chairman of the board of directors of the bank in that position. Ms. Wynn graduated from the London School of Economics and Political Science with a BSc in Honours degree and received a graduate graduate diploma from City University London and was called to the bar of England and Wales in 1983. He was enrolled as an attorney in the Supreme Court of Jamaica in 1990. Mr. Winter is also a holder of a master's degree from Columbia University. Before returning to Jamaica in 1988, Mr. Winter worked with Chase Investment Bank and Schroeder Rathheim, international company, both in New York. In Jamaica, he first worked with the National Investment Bank of Jamaica, then with the Mutual Society Merchant Bank, before going to Citibank, where he spent the next 4 years as vice president. Mr. Winter was deputy governor of Jamaica with responsibility for banking and market operations from September 1995 and was appointed as technical advisor to the Minister of Finance in November 1999. In 2001, Mr. Winter was appointed the first executive director of the newly established Financial Services Commission and served in that capacity until 2007, when he left to join the Caribbean Regional Technical Assistance Centre in Barbados as Capital Markets Financial Sector Advisor. So, Governor Winter, it's a pleasure to invite you to the podium and thank you for joining us.
Good afternoon, ladies and gentlemen. It's a great pleasure to be here. As your discussions of the last 2 days are coming to a close, I'm happy to be standing here, but a little bit nervous since the close of your 2 days is occurring before lunch. I didn't come equipped with any jokes, so this is all very serious stuff. But I think a good meeting with this candidate online, so let me punch it. What I intend to do is to share with you some of the key challenges that we've been facing in Jamaica in addressing the threat presented to us all in the shape of de-risking. And I will also give you a little view of the shape of what Jamaica's policy response is, or has been so far. Financial institutions started facing de-risking in Jamaica several years ago. There was a noticeable acceleration in the pace that we saw in last year, 2015. The impact in Jamaica has been mixed. In some cases, correspondent bank relationships were restricted. In other cases, they were terminated. And in others, enhanced due diligence or additional information requirements were imposed. Now, while Jamaican banks, as a matter of prudent practice, maintain enough correspondent banking relationships such that they were not faced, have not been faced, with an existential threat to date. And so they were able to continue normal operations without the corruption. There was nevertheless a price to be paid. Unfortunately, with just one exception, there was no opportunity to negotiate a monetary price. Instead, changes in correspondent banking relationships significantly impacted the ability of local banks to service relationships with local foreign exchange clients, such as what we call in Jamaica cameos. These are licensed entities that basically do foreign exchange trading on a less, on a sort of broker basis. Similar to what you see in an airport, but actually doing more trading than that in many cases. But also remittance service providers and agents of remittance service providers. So that it simultaneously undermined in Jamaica competition in the foreign exchange market and also reversed the progress that we were making in financial inclusion. Changes also affected other cash-intensive businesses like supermarkets. New layers of approvals for the onboarding of new correspondent banking relationships significantly increased the cost of implementing Know Your Customers measures. Conservatively, this has been estimated to cost about
$100 per customer in Jamaica. To give you an idea of what that means, that's about 2% of per capita GDP. It's hard to imagine a competitive banking landscape if there's that kind of cost. I would treat that as a rough figure to give you an idea. Now, Jamaica has in the past been categorized as being vulnerable to money laundering, particularly because the cameo business that I spoke of, these businesses deal in relatively high volumes of foreign currency cash. Partly because of this, Jamaica has over the years dedicated considerable resources to addressing these concerns by progressively implementing, as have all the countries in the region, the FATF recommendations. And our good friends from CFATF are here. The director, I'm sure he's been named from the podium all morning, or yesterday, to oversee that process along with the rest of us. The legal framework in Jamaica has been bolstered as a result of all this to disrupt the use of proceeds of crime and prevent the financial system from being used for the financing of terrorism. It also has led to an enhancement of the supervisory oversight in general in the financial service sector. It has, amongst other things, ensured that the relevant agencies are empowered to investigate financial crime and to undertake significant cooperation and information sharing with overseas partners. We in Jamaica have gone further than most, I dare say, and we have even criminalized the use of cash in Jamaica above a specified limit. And it's important to mention this that not only did we create the law, and those of you who know the Caribbean, or at least I just speak of Jamaica, we ran laws. You immediately have to say, well, yes, but what happens after that? Is it implemented? I'm pleased to say, it's not being repeated about, but I'm pleased to say that not only have people been investigated, people have been arrested, people have actually been convicted and are serving time for breaching cash limit in transactions. However, while it's clear that impacted jurisdictions must address any regulatory infrastructure deficiencies with dispatch, we think that there is an urgent need for correspondent banks themselves to review and, we would urge, change their approach to de-risking. Care must be taken to assess each jurisdiction, to measure properly the level of risk and the actual supervisory and enforcement mechanisms that are in place. And in that regard, we in Jamaica see engagement with our international banking and our international overseas regulatory partners as critical in reducing unwarranted perceptions. I'm encouraged by the recent notices come out from U.S. regulatory authorities, I think shedding more light on what they are doing. Earlier this year, government and banking representatives from the United States and Caribbean countries participated in a U.S. Caribbean public-private dialogue on correspondent banking that was held in Kingston, Jamaica. That was jointly hosted by our colleagues in the U.S. Treasury Department and my own Bank of Jamaica. Sharing information on challenges and progress made by Caribbean countries to mitigate risk and to implement and enforce AML standards were valuable first steps. In our case, we next prioritized meaningful engagement with our partners in the U.S. Treasury Department to deepen the understanding of U.S. policymakers and regulators of Jamaica's progress in the fight against money laundering, while also improving our own specific respect to Jamaica in particular. Now, it's true that a clear solution has remained elusive. But I believe that this type of interaction that we have engaged with is, together with the kind of high-level engagement that our governments have been conducting and have persisted with, that together these two channels are most likely to provide us with the way forward. But despite our progress and whatever progress may come, some corresponding banks may still undertake broad-based of relationships, given their assessment of costs of compliance and slim returns in small markets. Or maybe they're just wrong. They make a determination, their businesses, and oops, it's happened. These are big, big businesses. When they're gone, they're gone. Doesn't matter who is right or wrong, so I think we could continue to face this risk. And because of this, the solution to the problem, I think, goes beyond simply upgrading the regulatory and supervisory framework in affected countries, or, as I'm asking correspondent banks, changing their risk assessments. One solution is to build capacity in know your customer utilities and the development of national identification systems, and then to implement a framework to support our institutions' reliance on them. Such systems would provide standardized identification of natural persons and a centralized database from which KYC information can be retrieved and shared. These tools have significant potential in the near to medium term if they can be implemented, particularly if we can use common standards across the Caribbean region. And I'm aware that many of my colleagues in the region have been making progress in looking at some of these utilities. But I am concerned as to whether it is clear enough that these will in fact lower the cost of onboarding clients, that these will in fact serve to allow us to continue on a path to financial inclusion in our countries and bring to an end this serious risk of financial exclusion. Now, Jamaica has already embarked on preparing the way for a solution like this through the development of a national identification system. That system, when properly executed, can provide a unique personal identifier for every Jamaican, utilizing appropriate biometric information. And this system can serve as a cornerstone for a technology-driven approach to address international compliance requirements. I'll just take a minute to mention here and publicly thank the IDB for the role it has been playing funding the project in Jamaica so far. The grant funding, the research, am I allowed to mention the figure? $670,000 US. That has helped fund the first phase of the project. Now I mentioned this, I'm happy to say this with IDB present, because there's a broader point. The responsibilities and the associated costs of the development and implementation of such KYC and national identification system utilities can't be borne realistically solely by small developing states. But if we don't address the problem, we could find ourselves in a dynamic that undermines, certainly in Jamaica, one of our flagship development goals of broadening financial inclusion in Jamaica as we seek to multilateral financial institutions, governing bodies who oversee the standards of AML safety and help us to be clear what works and doesn't. And also in the partnership with developers of such technologies, so that they together with local authorities can undertake the right projects at the right time, at the right cost, to develop systems whose cost is low enough to be introduced into small, relatively poor jurisdictions such as ours in the Caribbean. The Caribbean has a long history of sophisticated, modern banking, but it delivers services, certainly in the case of Jamaica, and has done so for a long time, for a couple of centuries, to a very narrow proportion of the population, excluding the rest. And as we move our societies forward, it is very clear that if we do not make progress on financial inclusion, we will not make progress on inclusive growth. And if we don't make progress on inclusive growth, we will not have sustainable growth. Without sustainable growth, all the bankers present certainly will look at the Caribbean, perhaps or Jamaica, certainly the way maybe they look at it now, as a place that many other countries intend not to single out bankers. We look for an opportunity to exploit and we just extract that and we carry on. Not a healthy dynamic, something we are determined to change in Jamaica, and we think that the right answer in tackling the issues of de-risking may also serve us in tackling this broader world. In closing, I'd like to say this: de-risking presents an undue headwind for small developed states in their quest for sustainable growth and prosperity. I'd like to invite international standard setters and also our multilateral partners to place a more focused and a more sustained effort on the development and the articulation of standards that promote financial inclusion, and also the provision of practical guidance on how to reconcile those standards with the current safeguards against terrorism financing and the proceeds of crime into the financial system, and do so without diminishing at all the protections that those safeguards provide. And we would ask that due care be taken to ensure that these methods do not marginalize and exclude the financial systems of small, vulnerable states. Thank you very much for this opportunity to close your meeting, and I hope you have a good lunch and enjoy the rest of your afternoon in Washington. Thank you.
Thank you so much, Governor Winter. Jamaica has been held up as an excellent example in terms of making progress dealing with correspondent banking. So to have your presentation was really an excellent contribution to the entire event. We do have one more set of remarks that will be offered. We promised to credit Mr. Shasta again, and he wasn't able to be with us yesterday, but he's agreed to make some comments prior to closing. I think I'll leave the Bible. We'll close the Bible online, and just without any further ado, I'd like to invite Prime Minister Shasta to the podium.
When the USSR couldn't hold the country together economically, it became Russia. Berlin Wall came down. Pan American, which was the darling of the aviation industry, the first airline, it couldn't pay its bills, closed the doors. Eastern Airlines. We've seen example where things become economically viable, and it becomes impossible for us to continue because economics doesn't have a conscience. It only deals with what the reality is. So, in moving forward, I'm hearing a term that I like. It's called sustainable infrastructure. So it's been used now on a more regular basis. I found myself using it based on the impact of mapping. That we're going to rebuild our sector, we must build back with a sustainable infrastructure. But infrastructure is one of those words that has a multiple use. Because you can have physical infrastructure, you can have financial infrastructure, you can have social infrastructure. And here's a very important one, ideological. In the Caribbean, we've got to find that balance. That when we're building our physical infrastructure, that we have to accept the fact of global warming. That's to me what the good thing that came out of the Paris Accord is that what? That global warming is a reality. And this is not something that we're inventing to be able to generate funds for ourselves. I won't get into the argument that we're being asked to jump through all kinds of hoops. You know, a couple of years ago it was the carbon deck that was going to be the financial savior to our region. That is not manifested. I'm terrified that we're now jumping through hoops again with regards to COP. And we're going to find ourselves wanting at the end of the day. But the fact is, global warming is a reality. And global warming is having a huge impact on the small states in the Caribbean, as well as the vulnerable countries around the world that are in that depth. And we're being, even if we were to have the most disciplined behavior, that we would be the example in terms of green energy, we by ourselves cannot change the impact of the world. It requires everybody else to participate. Financial. We've seen that since 2008, a steady deterioration of the financial positions of our countries. G20 got together, which we started from the G7, to resolve their problems. We met on a quarterly basis, came up with policies and strategies to resolve their own economies. What about the rest of us? What money has been made available to clean up the mess of devastation that took place in our region? And because there was no money coming, the countries ended up adopting either fiscal growth, attempts for fiscal growth, which now created greater debt. We see that the world has been unstable. The currency issues that's taking place. Let's not fool ourselves with the Canadian dollar that was at par a year or 2 years ago. Now it's at 76 cents. That's a real impact on countries that are pegged to the US dollar. Social. As a result of now that we have high debt indebtedness, we've had very low growth levels, that our wealth on a per capita basis has been decreasing, that it's creating social problems, massive social problems in our region. The quality of education, quality of healthcare, quality of justice, quality of security, all have been diminished because those are the first sectors that are impacted when countries cannot afford to pay their bills. And then I say ideologically, let's not run away from it. That when the U.S. policy towards our Caribbean region, which I don't think was deliberate, that they created a vacuum, and that vacuum was filled by who? Filled by vegetarians, filled by the Chinese, filled by, for a period of time, by the Russians. And we now find ourselves going to meeting after meeting on a global basis, having to, as I call it, dance to the rhythms, to find an ideological idea that allows us to have a relationship with other people, recognizing we're still under the belly of the Western Hemisphere, and being penalized sometimes for some of the positions that we take. The same ideas of development. Where did citizenship by investment programs originate? It didn't originate in the Caribbean. The idea of a trust was
I say to all of us that we are hinged at the hips, America included with the Caribbean. We are your third border. We are an area that has a trade surplus. And that if in fact you have policies that allow the economies of this region to grow, and that we increase the distribution of wealth in our region, we provide excellent healthcare services, we provide a great education system, we provide security for our citizens. Who wants to migrate? And when people have a home, and they have a job, and they have assets, and they have something to lose, do you really believe that they're going to open themselves up to unsolicited business? No. So the intention is that we must grow. But what we have to recognize is that how we've been communicating to our partners, whether they're in the UK, Canada, US, it's not working. Because we're not getting favorable policies to support the region. Though all the evidence is there to the contrary. So I want to thank the CCAA for the work that they've been doing. I think that this was an excellent work. It came in a very timely period. And we are still very much at the crossroads. Because as the governor indicated, if a major bank from the States pulls out of the region, there is going to be no compelling reason for them to come back. What we have to do is prevent them from leaving in the first place. So I end where I started. The colonialization of the world, particularly in the Caribbean, is economics. And that'll learn to play the game a whole lot better. Thank you.
Thank you, Prime Minister. Perfect closing, and very much appreciate you were able to join us. I'm going to wrap everything up. It's been a very busy couple of days. So first I want to thank all of our speakers who joined us for this program and who made it what it was. So I'd like to personally give a hand to all of you. Thank you, Jeremy, who closed and opened the program and led us from what I've been heard so far, an excellent discussion. Look forward to following up with you, so thank you very much. I'm going to thank the American Development Bank. This happened because of the IDB, and so to Teresa and her team, sincere appreciation, and we look forward to continuing the partnership. This is very important and it's been great work with you. And I should mention our couple of the IDB, Elizabeth and Bashir and Gabrielle and who else? Alan, all of you who are here, who helped us and supported us going through this. I want to say thank you to all of you as well. I want to thank our hosts at the OAS for this beautiful room. I've been getting compliments on it. I want to thank TF Caterers who have kept us fed. Thank you. And of course, our sponsors and partners, the Bankers Association of Finance and Trade, the Caribbean Association of Banks, thank you very much, the Caribbean Council, Chris, thank you very much, Caribbean Export Development Agency, Financial IT, Florida International Bankers Association, Global News Matters, IGT, thank you, Organization of American States, and the Americas, we transfer for your support, very important to us. I can't leave here without saying thank you to Gwen and Nathan, who maybe you all don't know we're a three-person team that work at CCAA day in, day out, and I couldn't do it without Gwen and Nathan, so please, I'm going to lift on them. And the support we got from Arthur, who has been helping us and taking notes, and Raquel, who I think maybe in the room, but maybe downstairs. I want to also close with some, just again, emphasizing the thoughts we have in the countries that have and will be in the path of Matthew. We're getting over the news, growing crisis situation in Haiti, and of course the Bahamas is suffering today, and Florida tomorrow. So we have to keep that in our thoughts. Last but not least is the audience. Those of you who have given your time and your effort to be here with us, thank you. We look forward to seeing you at the future event. We hope you'll
speaker, you will show Prime Minister solution. He had originally was supposed to speak yesterday, but his flight got canceled due to the hurricane Matthew that was in the area. And so the flight got canceled all the way today. And so last week was the Honorable Chastity, the Prime Minister solution. And before that was Governor of Jamaica. Some very insightful issues that are affecting the region. I've heard the statements in the region certainly have allowed others to frame and brand this in terms of what the appeal is. It is now up to the region to reset.
I also thought there was actually one stuff there is to go have a box standard genetic with you, have that experience whatever makes you happy, but there is one to be
all of the sovereign countries throughout the Caribbean, small island Caribbean nations, territories, whether it's British territories or U.S. Virgin territories. We must do our parts to strategically align ourselves with technology is affording us an opportunity to be able to build bridges where before we were unable to do so. The idea of how do we then work within the confinements of the law and rules and regulation that will determine how we allow ourselves to do business. That is the big question moving forward. We can achieve it. And so we've heard from the International Monetary Fund, we've heard from the World Bank, and they've all chimed in. And Jeremy Wilson was an excellent representative of the issue, and he said that he would be a guest on the program and conclude himself. And so I wanted to say as we wrap up, while we close out the program, we broadcast outside of our normal time, attendance at this conference in Washington, D.C. Again, let me acknowledge the good folks at the CCAA. I want to thank Sally and Gwendolyn for helping to coordinate and allowing me to participate with the Virgin Islands, a platform, a voice, to engage. Andrew Klutz, the person who is in charge of marketing promotion, with the Austin Group, with the EDA, he was here and he spoke. And so the Virgin Islands was represented. The U.S. Virgin Islands had a voice at this forum. And earlier I saw the U.S. Treasury Secretary Lou, Jack Lou, who was here earlier, meeting with the International Monetary Fund. And so I want to say in closing that those organizations that successfully put this together, including the Central American Action Organization, the IDB, the Inter-American Development Bank, and the others, IGT, the America's BAF, the Florida International Bank Association, the Organization of American States, the Caribbean Association of Banks, Caribbean Export Development Agency, the Caribbean Council, Global News Matter, and Financial IT. I want to say special thanks to Global News Matter, Melissa for Chan. She is a colleague, she's a member of my think tank. She's the reason I'm here. And so I want to thank Melissa for facilitating this stand-up. She wasn't able to make it, she was in Venezuela, but certainly we will catch up. But folks, that's it for now. I want to say thank you for back in the Virgin Islands support. Hope all is well. And Alfie, good job, James Band, for making it happen. This has been another show, broadcast of the Marketplace. And I want to say thank you so much for tuning in. This is NBC Live in the Marketplace. I'm Anthony Weeks. We'll talk soon.
¿Se van a quedar a comer algo?
Sí. ¿Tú tienes unos minutos para platicar con nosotros, tío? ¿Tienes algunos minutos para platicar con nosotros?
Claro, sí. Ahora quieren sentarnos a comer. Es que tengo un hambre. Si no estaba obvio.